Welcome to TradeTheNBI.com. This is John. This report is for the 6th of March, and while we can see we've had a little bit more of a fading into that giant up bar, and pretty much we're at that 50% level for retracement. We ended up getting a little bit of support there, but you can see from a DOC steel standpoint, short-term buyers that jumped into the post-speech excitement faded it out completely, and then what we ended up having is this move back above 13.5, which typically represents a little bit of weakness going through. So we can see that push back down below, and we're at super extreme levels now with the red. So before, where you could get buying that doesn't increase the long-term buyer red DOC here above peak levels, when you do reach this level, there is going to be a correction. That's just the way it's built into an extreme. Now it can last for a little bit while, and we can see that we haven't popped above it. What you really want to be seeing is this resetting, so that without much of a fade in price, but not the case at this particular point. Shorts haven't really activated much into that. There was a little bit of increase at the same time, but I always look for these spiders, as we call them, where it forms two diamonds, and you end up like these look like the legs of a spider. But these tend to have sharp value because it's a complete reversal of the direction that things were headed. As from a daily standpoint, we looked at the 50K chart from before, in a little move that went up. It caught the reset, said sell that as we were way into the peak range, and then you can see now complete reset. So from a 50K standpoint, completely oversold and turning around, which is not too different than what we're just seeing from that daily, where we shot above 13.5 with the orange. But sustainable on the first turnaround, not usually. Usually it comes back again and we get a reset. Not horrible from a shakeout standpoint overall. Let's go to the NQ. And we can see it was a little bit stronger turnaround recovery towards the end, and it had already reset its shakeout a little bit better, and you can see it was not quite as bad. It's still up there though, and less of a spider, which meant that the short-term buyers were a little weaker than they were on the ES, and there's a little bit more activity in shorts because you're above zero. So I think that the NASDAQ has a little bit more fuel, so to speak. And again, we talked about central banks jumping in right at this magenta line, and sure enough, they did, and in a hard way. This was a huge move for the euro. You went from 0.49 to 0.62. That's a huge move, and that is central banks' involvement. And this is no different than the involvement that we see in gold. Bonds to a lesser degree, still trying to fight back, because even though you'd find it amazing that you would see any return back into here other than the weak market the other day, simply because what are they up to, 95% guaranteed rate hike? So if it doesn't happen, then obviously you're going to have a huge rally in TLT there. But the reality of them attempting to slow down growth before it begins seems odd. It really does. But they think that they want to move towards a normalization, but all that's going to do is create a nightmare in housing, debt, everything else. And there's no real inflation concern. I mean, yes, consumer prices are rising, but it's not to the point where they really need to be stifling growth, particularly when you're only at 1.9%. It seems counterintuitive, but conspiracy theorists will love it because they'll suggest that it's an intentional attempt to make things look bad for Trump going into 2018 election, that if they start now ramping it and force a recession like they did for Reagan, that it'll hamper their ability to maintain control of the House and Senate. So that's conspiracy stuff. We don't need to worry about that. We do know that there is going to be and maintained cheap oil, period. And that's good for growth, but you have to have pro-growth policies, which we're starting to see. It still remains unclear whether or not the Congress will do anything, and that is starting to, I think, have its impact on the market as they continue to see nothing after several months of talk. Nothing which is not bad for business, which actually is also helpful for the market in some sense. However, some of them are baking in the idea of these tax breaks and some of these other things, and that's going to cause some real difficulties from a macro standpoint. Now, gold, we have the ABM. Might as well list those levels. You're going to get these soft, it's going to pause a little bit because you're going to get these soft retraces that are going to come back, fill some of these areas. The overall trend for gold going to be continuing to go higher. Not too concerned. I would keep an eye on it because this could be an opportunity if we can get a little bit better dip. Every time you get below that green ABM, it's an opportunity to get in at the low on the return. It's already oversold on that dip. That's what's crazy about that. But continued slope angle here for the red DOC, and that's going to take a little bit more to turn it around. You also have that orange peak above there, and you're going to get a little bit of pullback within that. Needs to come down a little bit sharper, and still plenty of short people active in this, well above the zero, and starting to get the separation. So the question will be whether orange reset comes all the way below or gets caught in the gap, which would be continuation of softness. So those are things to look at. So going back from that short there, we've had a couple little pops, but in general we've maintained a general red, and then it started to improved quite a bit, and literally that started to get more active right about here going in as we saw the increase. We started moving outside the orange levels, getting outside of the cyan and red zone, but in general very weak except for a few of those to the upside. We really didn't get any resets coming under the red, which leads me to believe that this is probably not going to last very well. We could see a soft open. So that's part and parcel of it. So people could take some gains. No issues with that. We're still well above the daily ABMs, and I think that's the benchmark right there. Where's that? All the way up to 2361 range, and we're still at 80, so there's still plenty of room above that. As always, though, continue to look for me on the Skype chat. Trade well.